Hi, it's Sean Burton. I'm the CEO of Cityview, and thank you for having me on today. So, Cityview is a multifamily developer and operator based here in Los Angeles. We manage about and own about 10,000 units throughout the western half of the country. We have been around for 21 years, and again, we're based here in Los Angeles. Absolutely. So, obviously, we're here in LA, we're going through a really kind of devastating natural disaster. It's the biggest natural disaster that really LA and California has had, and will be probably the second largest natural disaster in terms of cost, other than Hurricane Katrina. So our hearts go out to everybody who's been impacted by this. We've lost over 12,000 structures between the wildfires. Over 30,000 people have been evacuated. And it's going to be an incredible undertaking for Los Angeles to get back on its feet. And it's something everybody in the real estate community and the broader business community and elected officials are focused on, because it's going to take all hands on deck to even begin the kind of rebuild and recovery process that we need to go through. What I would say is, we've been through a really difficult time, obviously, in the real estate and multifamily industry over the last few years. First, we had COVID, and then we had these rising interest rates, which has destabilized values. It's made it very difficult to build new housing in key markets. It's one of the reasons that you had historically high starts over 2 years, and you've really seen those drop off a cliff really throughout the country. The issue is, as populations continue to grow, jobs continue to grow. So we're going to have to find some way to meet that demand for new housing. And we operate in the western half of the country. We're kind of known a lot as a California firm, but we're also in Seattle and Denver and Dallas and other markets. And what you're seeing really across the board is an increase in jobs, an increase in population growth, but no new housing of any scale being built. So because of that, and because of the impact that you've seen on values with interest rates, we've been buying a lot of existing projects over the last year at a deep discount, build them for. And then in the next 12 to 24 months, that'll shift is our understanding, and there'll be an opportunity to actually build again and add to the housing stock and meet some of the new housing demand that's out there. I mean, one of the unique things about Cityview is half of what we do is ground up development, and half of what we do is core plus or value add, buying existing projects. So we're able to turn the dials up or down on those to meet the market need. And so again, for the last kind of 12 to 18 months, we've been buying at a deep discount to replacement cost, and we think that'll shift over the next 12 to 24 months. And so we are actually in the process of entitling about 2,500 units of new housing in Denver and in San Diego and in Newport Beach and in the Bay Area and here in Los Angeles. And we'll throw the switch on that when it makes sense to go vertical to meet that demand. So that's a great question. We just went through a process for 6 months where we worked with a third-party market research company to look at the 40 biggest markets in the country across 90 different variables, and then really whittled down to our kind of top 10 to 15 markets that we want to invest in. And we looked at a combination of demand factors, job growth, types of jobs. We looked at education of the workforce. We looked at all kinds of supply factors, and then other kind of broader economic factors. So there's a lot of markets that we're bullish on. California is a market that's often maligned, and people say it's there's such a difficult regulatory environment. Why would you invest there? But on any given day, it's the fourth or fifth largest economy in the world, and I think people forget that. So it makes sense to be here. We have great jobs and great educational institutions, and actually a growing population again. We lost a few people during COVID, but we've made that back and then some. So that's there are key markets in California we think will continue to make sense. Doesn't mean you don't need to be aware of the regulatory risk. You do, and you need to understand that. But we think there'll continue to be opportunity. We are fans of Seattle as well as a market. When you look at the job base there and people coming back to work and the need for housing. There's great opportunities, we think, in the Pacific Northwest, particularly in Seattle. We're fans of Denver. There's certainly parts of Denver that have been oversupplied. We stay away from those markets, but you still have a growing population. It's the second most popular place in the country for millennials to move after Austin. They love the job opportunities, the cost of living, and the Rocky Mountain lifestyle. So that's a market we'll continue to focus on. And then Dallas continues to be a target market for us. We actually opened an office there last year. And although it doesn't have the barriers to entry as some of the other markets we talked about, when you have 300 to 400 people a day moving to Dallas, you need to find housing for them. So those are all markets that we're kind of focused on over the next 12 to 24 months and beyond.